Hello learners, welcome to our session today. I am your instructor, CPA Ringo Frederick. Today is a continuation of what you were doing earlier on. Recall, we are in question number 3 of our block revision, so it will be very important that we do understand the whole concept of whatever that you are doing. And as I always say that anytime you are approaching these questions for auditing, let us always be open-minded, right? We are approaching these questions like auditors, but not like students, correct? So today's session, let us go through that question number 3 and see what you are required to do. Question number 3. Going through this question number 3, these are what you are told, that you are the manager in charge of ABC Limited. The auditor in charge has handed over the file to you for review. Okay, you are required to review the facts of each of the 3 cases highlighted below as extracted from the file and respond to the questions that relate to each case. Case 1. ABC Limited sells 3 different models of bathroom sinks, namely X, Y, and Z. The following is historical gross profit margin for each model. Model X, Y, and Z. Percentages I'm given at that point. When performing analytical procedures on income statement for the year ended at 1st December 2013, the audit senior computed the gross profit margin and compared the ratios over the 5-year period. The comparison revealed the following: that financial year ended at 1st December 13, our gross profit margin was 16%, 12, 13%, and 2009 to 11, 12.5%. The financial controller of ABC Limited explained that the gross profit margin had increased significantly in year 2013, as there had been a significant shift in the sales mix from the low gross profit margin models. The audit, we can clearly see that in 2013 our gross profit margin kicked 16%, right? From 13% compared to the previous year, which was 2012. So the auditor senior concluded that the financial controller explanation was reasonable. As such, a shift in the sales mix will account for an increase in the gross profit margin. Here we are told, describe 5 additional audit procedures. Describe 5 additional audit procedures that the audit senior should have performed to exercise a proper degree of professional skepticism. So that is a question that I'm giving my good students, and we are supposed to handle that bit. So I'll squeeze this question more on the corner. So that was case 1. We're having other cases which we'll be looking at right now. But here, there's a key concept that is coming into our attention. At this point, key concept that is coming into our attention, we're having a concept of professional skepticism. We're having a concept of professional skepticism. Professional skepticism. That is, of course, professional skepticism. Professional skepticism. We have this concept of professional skepticism. Anytime you're talking of professional skepticism, my good students, basically, what should always tend to come at the back of our mind? Professional skepticism. This is a mind, or rather approaching the audit work with a questioning mind. I am approaching a certain task, not 100% convinced that these books are accurate, but I'm approaching them with a question mind that these books might be materially misstated. And it's always advisable that as long as you're conducting an audit work, you should always approach this work with the concept of professional skepticism. It will really assist us in one or the other. So here we are being told that, yes, the management has given us assertions. These are the claims, either explicit or implicit. These are just what? Claims. These are representations by the management that this is what is there. This is what is there. And I think it is also very important that, again, Mwalimu should also kind of remind us the concept of what we did earlier on in relation to in relation to assertions. So anytime you are talking of assertions, basically my good students, Mwalimu is saying that at this point you are looking at what? We are looking at claims, right? So in this case, first of all, very important, we reminded ourselves of what professional skepticism is. The other key element that we should also remind ourselves is the aspect of management assertions. We normally term them as management assertions. Term it as either financial statement assertions, financial statement assertions, or at times we normally term it as what? We normally term it as management assertions. Management assertions. So anytime, my good students, anytime you've seen an assertion, basically at this point you're looking at representations of directors that are embodied in the financial statements. And at this point, basically you're looking at what form of a good case, just take as it as claims. Managers are claiming that this is what we have in our financial statements. It is upon us as auditor to do or to consider such claims and confirm that they do actually exist. Actually, I'm giving you some of the assertions, right? So you're saying that assertions basically are representations of the directors that are embodied in the financial statements. And at this point, you're looking at it as an aspect of the area, either explicit or implicit, claims that management is making regarding information contained in the financial statements. They are giving us claims regarding what is contained in the financial statements. And mentioning that, you'll find that these assertions basically are always classified into three categories. So we normally tend to look at assumptions in aspect to do with assertions about classes of transactions, assertions about classes of transactions, assertions about classes of transactions. Number two, we normally tend to look at assertions about account balances, assertions about accounts balances. And finally, we normally tend to talk about assertions about presentation and disclosures. Assertions about presentations and disclosures. Assertions about presentations and disclosures. Basically, these are the assumptions that we normally tend to consider anytime, my good students, you're handling what? Anytime you're handling auditing, these are the main assumptions, or rather assertions that we normally tend to look at, So, having that in mind, you'll find that we start with the first one and see what it entails. We start with the first one, that is understanding assertions about classes of transactions. Remember, we are just doing a review because all these items you did, right? So, assertions about transactions and events, assertions about transactions and events, about transactions. These are assertions about transactions and events, assertions about transactions, assertions about transactions and events. We normally tend to talk of the following. That is, of course, I need to make sure that these transactions occurred. So we are talking about occurrence. We are talking about aspect to do with completeness. We are talking about aspect to do with accuracy, classifications, and cutoff. I'll explain each one of them. So these are our assertions, aspect to do with transactions and events. So whenever we are talking about occurrence, basically, my good students, at this point you'll find that we just want to make sure that transactions and events recognized in the financial statements actually occurred and they pertain to the entity. They do relate to the entity. What about completeness? What should we understand? For completeness, basically, we are saying that all transactions and events that should have been recognized in the financial statements have been recognized and recorded appropriately. Talk about accuracy. The amount and other data relating to the recorded transactions and events have been recorded appropriately. They have been recorded appropriately. Accuracy. They should be accurate. Talk about classifications. You'll find that transactions have been recorded in the correct class of account. If it is fixed assets, it is recorded in fixed assets. If it is income, it has been recorded in income. Talk about the aspect of the class of accounts. Then what about cutoff? Cutoff, anytime you're talking of cutoff, basically, my good students, you normally tend to look at what? The time period. The time period that this item do aspect of what? Do relate, or rather the time period that they have been attached with. That is transactions and events. These are assertions under transactions and events. What about account balances? You'll find that some of these assertions are common. So whenever we're talking about accounts balances, these will include account balances in terms of maybe debtors. Talk about aspect of trade payables. Talk about balances of our assets. All these items, right? So under accounts balances, basically assertions main will be talking of a must prove that our item is existing if it's asset. So talk about existence. A must prove that actually I'm the one owing these assets. Rights and obligations. Rights and obligations. Talk about another key element here we should also be able to understand. The aspect of valuation. And talk about completeness. Completeness. So these are the main assertions that we'll be looking at under accounts balances. You'll find that completeness is very key. It's cutting all across. The aspect of occurrence, in this case you're substituting it with what? Existing. So if it is for account balances, what Mwalimu is trying to say here, my good student, is that the assets or liabilities and inquiry elements including the financial statements actually existed as at the balance sheet date. I must prove that this item actually existed as at the balance sheet date. Talk about rights and obligation. The entities holds a right and control to the assets, and the liabilities are the obligations of the firm. I must prove that they do relate to the firm. Valuation. All liabilities, assets, and equity items are included in the financial statements at appropriate amounts and measured as per the identified financial reporting framework. Completeness. All assets, liabilities, and equity elements that should have been included in the financial statements have been included to make sure that our transactions are actually complete. To make sure that our transactions are actually complete. Then finally, talk about presentations and disclosures. The same concept still is going to apply here when we are talking about presentations and disclosures. So, assertions about presentations and disclosures. Presentations and disclosures. Presentation and disclosures. So for presentations and disclosures, basically at this point, my good students, we are looking at what? Item to do with, of course, we should be talking of occurrence. You must prove that they actually occurred. Number two, basically, you normally tend to talk about completeness. Completeness. Number three, talk about accuracy and valuation. And finally, talk about classification, of course, and understandability. So basically, these are the presentations that you must always tend to focus and consider, that anytime you are talking about aspect to do with assertions and aspect of presentations and disclosures, these are the main items that you must always tend to have at the back of your mind. These are the main items that you must always tend to have at the back of your mind. So occurrence basically just the same as what you had explained it here. Talk about completeness, talk about accuracy as well as classifications. Now, back to our question here. In that case, Mwalimu was just reminding us what we did about the aspect of assertions. So back to our question where we were asked that we need to kind of, we are supposed to describe 5 additional audit procedures that the audit senior should have performed to exercise a proper degree of professional skepticism. These are aspects of claims that manager, or rather management, had given to us. And these will include aspects of, these are transactions basis, right? So for transaction, I'll just come and look at what? The audit procedures that I should conduct on transactions. Talk about occurrence, talk about completeness, talk about accuracy, classification, as well as the cutoff. So one of the procedure that we should conduct here amongst the aspect of our further procedures to be conducted, talk about these items. Maybe whenever we're talking about occurrence, basically what are we talking about? So number one, we're talking about occurrence. For a sample of sales transactions record in the ledger, the sales invoice back to customers' orders and dispatch documentation. I must prove that whatever sales that we had there that led to us to increase our aspect of our gross profit, they actually occurred. So therefore, I'm going to request for what? We're going to request in this case for aspect to do with a sample of sales transactions. That is very key to consider. Of course, yes, you are the manager as much as I can trust you with your word, but I'm an auditor and I'm approaching my work with professional skepticism. I must request for these items, right? When we are talking about completeness, basically what should come at the back of our mind? For completeness, basically I should also make sure that whenever we're talking about completeness, at the same time we should make sure that all balances do agree from the individual sales ledger accounts to the aged receivables listing and vice versa. Also talk about compare the gross profit percent by product line with the previous year and industry data. I should also compare the level of prepayments to the previous year to ensure that the figure is materially correct and complete. So we are looking at it to make sure that whatever that I'm being told, all such transactions were correctly put into what? Into our books, and they were very, very complete. Rights and obligations. In that case, rights and obligations also key to consider. I should review bank confirmation for any aspect of data, or rather data balances outside, as well as bank accounts, of course, to make sure that whatever that was disclosed in terms of if it is a aspect of bank, or rather cash and cash equivalents, actually is there, or rather actually it existed. Then talk about aspect of cut-off procedures. I should also make sure that the transactions that are being reported, or the transactions that are being reported, they actually do exist as that year, as at that period that you are looking at. So you'll find that once you are able to identify, like this question clearly stated to us, that we need to conduct further audit procedures. And whenever we are talking about our procedures, audit procedures, more so when it comes to our transactions, one thing that should always tend to click at the back of our mind, my good student, is we should always try to remember the aspect of management assertions. These are termed as financial statement assertions because they involve our financial statements, and whatever information that I'm getting from there, these are just claims by the auditor. So we need to make effort and make sure that we've kind of conducted, or rather we've looked into these assertions of ours. So basically that is it with that part A, case A. What are we being told in case B? What are we being told in case B? What are we being told in case B? In case B, my good students, these are what you are told in case B. So I'm sharing it here. I believe it's visible. So case B, I'm asked to, while reviewing the audit plan for ABC Limited, the senior auditor observed that the plan required an accounts receivables confirmation be sent to Avril Limited, the company main customer. However, the financial controller of ABC Limited had advised the confirmation should not be sent, as this could upset the customer who did not like receiving accounts receivables audit confirmations. The audit senior agreed not to send the confirmation. So here we are asked to explain three measures that the audit senior could have taken to obtain reasonable assurance, Remember, my good students, here, part B is talking about reasonable assurance. And our main concern as auditors, knowing that by this time I do understand, we all know that audit is an assurance engagement. I need to enhance the degree of confidence to our financial users, or rather to the users of the financial statements. So this is to say that at any given point, I'll have to provide this aspect of reasonable assurance. But in this case of ours, we are told that I'm having this company, where this company basically at this point, we are told that I'm told that I'm not supposed to send the circularization to our debtors. So by the time that I'm being told like that, first of all, of course, I'll ask myself a lot of questions. I'm going to ask myself a lot of questions. Why am I being hindered? Why is it that managers don't want us to send circularization, and yet sending this circularization is a process of us obtaining audit evidence? So first thing I'm going to ask myself is a lot of questions, because our main task, if you can recall, when we talked of assurance engagement, if I can just recall, or rather remind you what we mentioned about assurance engagement. Recall that, my good students, anytime you're talking about assurance engagement, we just want to look at it as an aspect whereby I'm having an aspect of a three parties relationship, whereby I'm having a practitioner who is being given the mandate to review the work that has been prepared by the responsible party, so that as at the end of the day, he should give an opinion which will increase the level of confidence to the intended users against certain subject criteria, or rather against certain criteria. So you'll find that at this point, I'm having, number one, we are talking of what? We are talking of assurance engagement. If you ask of the elements, of course, you're talking of three-party relationship, which in this case I'm going to include a practitioner is involved. I'm having aspects to do with I'm having a practitioner, I'm having a responsible party, responsible intended users, we do have subject matter, as well as suitable criteria. So in this case, we find that I'm having a practitioner, which in this case is an auditor. We do have a responsible party, which in this case is management. We do have intended users, which in this case are shareholders. We do have aspects of subject matter, which in this case is financial statements. And finally, we do have a suitable criteria, which are just what? International accounting standards and any other standards that will help us to come up with our reports. So looking at this case, my good students, you'll find that this manager was on the opinion that I should not send circularization to the auditors, or rather to the debtors. And you find that that will form a very fundamental item in the event that you are talking about, or whenever you want to give an opinion on the true and fairness of the financial statements that has been obtained. So mentioning that, you'll find that at this point, what we should do in the event that that has been kind of refused, number one, what we should always consider to do is to agree the balance from the individual sales ledger, or that is an aspect to do with the audit senior should have not only talked to the accounts payable clerk, but also obtain invoices for consultancy fee for the new computer system. That is, of course, we are in case 2, right? We are in case 2. That reconcile the customer statements and the invoices. That is as simple as that. Number one, you're talking about reconciling, because you are looking at debtors, right? And looking at debtors at this point, recall, we want to reconcile, because I'm sending this circularization for them to confirm if these balances are correct. So if that has been kind of put off, I'll be required to conduct our own investigations, that is by doing our reconciliation. Number 2, we should recompute the totals of the customer's balances and compare with the control accounts. Also, another key element, my good students, you can also say is that the audit senior should have also considered requesting the customer to call the auditor directly. Since the financial controller indicated that the customer will have problems, the financial controller should have given the audit senior the chance to determine the confirmation is to be sent. So just look at it in this case. What are other avenues that you're going to exploit for us to get this confirmation from the debtors? Or rather, why should we have not gotten this confirmation from the debtors? Basically, that is what we are looking at here at this point. Then, after we've talked of that, that should take us to case B, or rather case C. Look at case C. What are we told in case C? Case 3, we are told that the audit senior was also responsible for inquiring about the large increase in professional fee incurred by ABC Limited in current year. The audit senior asked the accounts payable clerk of ABC Limited, who stated that the increases was due to accountancy, consultancy in relation to a new computer system, and legal fees paid for drafting lease documents. The audit senior documented the explanation and continued with other audit work. We are required to identify 2 steps that the audit senior should have taken in order to reach objective conclusion on the reason for the increase in their professional fees. So again, you'll also find that one is also direct. So one thing that we are going to do here, my good students, steps the auditor senior should have performed in this case is, number 1, to check authorization of payments from Board of Directors minutes, to review the budgets with the amounts paid, as well as to review the consultancy agreement between the consultancy firm and the client. Why are this fee may be raising? Or rather, why these fees are probably rising at a very high rate. I should make sure that I've reviewed the agreement between consultancy firm and the client. Also, I should also obtain management representations on payment mode. How would this person be paid? How would these persons be paid? So you'll find that in such an event, basically, my good students, that is what we'll be looking at. That is what we'll be looking at when it comes to the concept to do with this bit aspect of us considering some cases. And actually, as I mentioned from the word go, at this level, you'll find that you'll always be given a situation case. Now is upon you to go through it and try to focus, or rather try to recall which concept are they testing. So to this point, guys, my good students, I've provided you with the solutions also just below this video. So kindly just go through it. And once we meet in our next session, we're going to look at question number 4. To this point, thank you so much, and let us meet in the next session. Thank you.